지난해 미국 워렌 버핏 주주총회 현장에서 우연히 만난 한 호주 자산가가 있었습니다. 당시 그는 제게 호주에 오면 꼭 연락하라는 말을 남겼죠. 그 약속을 지키기 위해 오늘 저는 호주 골드코스트에 왔습니다. 전직 변호사이자 현재는 수천만 달러의 포트폴리오를 갖고 있는 로이드. 하지만 오랜만에 만난 그가 던진 첫마디는 꽤나 충격적이었습니다.
It's a bubble. It's a bubble. It's a bubble. I stand behind. I've done so many podcast episodes on this. It's obvious.
지금 주식, 부동산, 암호화폐 할 것 없이 모든 시장에 유례없는 탐욕과 거품이 끼어있다는 겁니다. 그는 왜 지금이 폭락을 겪어보지 못한 이들에게 가장 위험한 시기라고 말할까요? 그리고 버핏의 철학을 따르는 그는 이 파티가 끝나기 전 어떤 준비를 하고 있을까요? 호주의 50대 자산가 로이드가 들려주는 잃지 않는 투자의 실체를 공개합니다. 여기가 이제 버츠 비치 앞입니다. 제가 옛날에 실리콘밸리에서 인터뷰 다닐 때도 들은 적이 있는데 좀 부자분들은 그런 식으로 좀 수상가옥이 그리고 집 앞에 좀 요트가 항상 있으신 모습이 좀 있더라고요. 여기도 좀 바다랑 가까운 도시라 그런 게 있나 봐요. 너무 예쁘다. 이런 데 살면 무슨 기분일까? 아니 집 앞이 그냥 진짜 비치네. 비치. 연락이 왔습니다. Just parked across the road from bamboos.
Actually, what we might do is we might order takeaway.
Takeaway?
Yes, takeaway, please. 2 ham and cheese croissants and 1 Coca-Cola and 1 mocha.
I got the name, please.
Lloyd. Lloyd. Where are you from? Oh wow, you're Lloyd from home, huh? South
Yeah.
America. Lots of people from South America here.
Yeah, I know.
There's heaps. Yeah, it's popular. Oh yeah, you want me to pay, huh?
Yeah.
Okay. Oh, you found a good spot, huh? So come, Gold Coast, beautiful. And nice place to work. Yeah. Thank you. So what we'll do is we'll get some food, and then we'll just go to one of these tables down here.
Is it okay that I'm sit here too?
Yeah. Oh, you want to do it this side together? That's fine, of course. Holy shit.
Wow,
Yeah.
I really like this. Thank you. This is my first time croissant
Uh-huh.
in Australia.
Oh, I hope you like it.
Your best food? Which one is your best food?
I think Australian pub food, like bangers and mash, like English pub food. I think that's the best food.
Oh, really?
Not really Australian. There's no such thing as Australian food. You know, we've taken it off everyone else. We've stolen it. Is this your first time to Australia?
Yeah.
Wow, man, it's amazing.
Gold Coast is really nice.
Yeah.
Don't you think about move to another city?
Where? Which one's prettier than this? Show me another prettier city than this one.
Have you been to other city?
Yeah, I lived in Sydney for a little bit. I've lived in Abu Dhabi. I've lived in Dubai. I was in Canada for 6 months. I've been all over the world, so I definitely know what's out there. I don't think it's very good. You like it?
Yeah.
So yeah, I've spent some time overseas. I just don't. This is beautiful here, and it's small enough, and it's close to the East Coast, and it's right on the Pacific Ocean. It's got the best beaches in the world. It's sunny all year round. It doesn't get too cold. Doesn't get too hot. Good people. It's good. What's it like in Korea?
I really like my city too.
Yeah.
Everything is fast.
You got fast internet in Korea, right?
Yeah, that's right.
Is it slow here, the internet, compared to Korea?
A little bit. But I like this speed too.
So what took you to the Berkshire Hathaway shareholder meeting? Are you a shareholder?
Just one share, but
Which one, B or A?
of course B. How about you? A?
Actually, I've been threatening to buy an A lately. I was going to buy one when it fell to $450 B class. I was going to buy an A class share, and I just didn't. But I want to. I can get one now, but it's a little bit expensive.
That's right.
Yeah, it's not like when Warren Buffett starts buying back his own shares, I will buy them, and I'll turn my B class into an A class. I have enough to do that. I just haven't done it.
When did you start your investing?
When I was 23.
23. And you're a uni student?
Not a uni. I had an interest in it when I was in uni, but I left university and graduated with as a lawyer when I was 23. And so when I left, I went to Abu Dhabi to get a job.
Really?
Yeah, and I was working on the Formula One circuit in Abu Dhabi. That was my first project. And so when I had the job, I wanted to not work anymore because I hated working. And then I was like, how do I get out of this? So I thought, well, if I invest in shares and get enough dividends, I'll have enough passive income to leave. So I started to get interested in shares, and I picked up a book called The Snowball by Alice Schroeder, which is the story of Warren Buffett. I just fell in love with value investing. I read The Intelligent Investor after that. Then I opened a brokerage account, and I started with $2,000. And I actually bought shares in a bank, Westpac Bank, It's an Australian bank and it pays really good dividends, tax-free dividends. Yeah. So I thought I'll start there. The bank's not going to go broke. And then I started, and then that was it. And now our portfolio is millions of dollars.
Yeah.
And we've just been progressively buying more and more. But I just sunk my teeth into Warren Buffett books. I read every book on investing, all the letters to shareholders. I did the CFA Charter program. Have you heard of that? The CFA Charter program?
No.
So CFA is...
CFA.
Yeah, CFA, yeah. So I did that up to level 3. I passed level 1 and 2, and then I got to level 3, and then I didn't complete it because I started a business. And I started a side business to make more money to invest more. And all my business endeavors that I've got, I just started a 5th company here, a 5th business with a partner. In fact, the guy that was with us in the line.
Oh, really?
Yeah. And so I've always started businesses to be able to just have more cash flow, to buy more shares. Because I've always just wanted to buy shares. In my ideal life, I would just manage money. I love managing money. Yeah.
That is your hobby.
Uh-huh.
As your video, I heard that investing to real estate is very common thing in Australia, but
Yeah.
why do you choose to invest in stock
Why do I choose to invest in stocks
Yes.
instead of property?
of house or property?
This is a big topic. Well, a lot of the people that decided to invest in a house are not here at Budds Beach at 12:47 p.m. on a Friday. Where are they? Look around. Where are they?
No one's here.
Right, so where are they?
In the workplace,
Yeah. Why are they there?
they need to pay for the mortgage.
Yes. So
Yeah.
I think that's probably sums it up pretty simply. If just having a mortgage was the path to wealth, everyone would be wealthy. And I don't mean by money, I mean time. So again, I think I chose stocks because there's no leverage, so I don't have to borrow money. So if you don't have to borrow money, it's very hard to go broke. I don't know anyone who has gone bankrupt with no debt. So if you have no debt, you can't go broke. Well, that's a good start. So I didn't want to get into debt. I didn't want to be tied down. I didn't know where I was going to live. Now, in hindsight, do I wish I had bought my apartment we live in? Yeah, way back. Yeah, maybe. But if I had I would have not had the equity that I used to build four or 5 businesses. I wouldn't be able to build a portfolio, which wouldn't pay us passive income. So I like how I've built my wealth because we pay rent, and the equity that I would have used for a deposit and costs and all the running costs of the property, I've put into shares, and they've grown really well. So I think I like shares because it's it's purely passive income. There's no tenants, there's no administration, there's no maintenance, there's no upkeep, there's none of that. You don't have to manage it. It's it just ticks along, and I like that because it gives me my time back. It's very low maintenance, and I like small business because small business produces a far better return than real estate. Stocks produce a far better return than real estate. If you look at the last 100 years, stocks have pulled in, if you include dividends, like 12% a year. Yeah, and real estate's 7.8 to 8. I know in Australia it's been, in the last couple of years, it's been 12, but generally it's lower. But why people love real estate is because of the leverage. They love the leverage gains.
Yeah.
The problem with that is if you've got to tie yourself to a big mortgage debt and spend 40 years of your life working in a shitty job and commuting every day, what's the point? Like what's the point?
The goal?
Yeah, like what's the goal? What? Oh yeah, I've got 5 million. Yeah, but you lost your life in the process.
Yeah.
That's why I like that quote we spoke about before. Like, so if we look at that, if we look at that quote, that's mine, right? If we look at that quote, so again, no price is too high to pay for the privilege of owning yourself. So the price I paid for the privilege of owning myself was no mortgage and no property. So I may have, by and large, I might have missed, I don't know, probably maybe 300 grand in capital gains. Not that much. $300,000. What, in 13 years I would have made 300,000 if I bought my house. Who cares? Like, am I prepared to pay that price to own my life? Yes. It's a very low price. And I think everyone is not seeing that. They're seeing, I must get on the property ladder, I must own a house. If I don't own a house, I'm a peasant. If I don't own a house, I'm not part of the tribe. If I don't own a house, I don't belong in society. And people care too much what people think. I live this beautiful, great life that I'm very happy about and grateful for. I'm not the richest, but I have done it all without owning a single piece of real estate. And I think I just don't think that there's these houses, like there's a house in Brisbane today, where you came from, right?
Yeah.
I shared it on my stories. Here, this is just ridiculous. It's like, this person bought this crappy house for $3 million. Look,
Wow.
it's horrible. Now think about that, $3 million for a house, for a crappy house. Why? Why wouldn't you, like you can buy, for the same amount of income that would produce, our laundromat, we bought it for 250 grand and it produces more income than that. Think about that, it's a tenth cheaper. So I don't think people are good at finding value. I think that's overpriced. I think they're never going to get their money back they're not going to double their money in 7 years. So I think people are just caught up in the speculation and greed of property, and I don't like that we've turned shelter, which is a basic human need, into an investment vehicle. I think it's a real shame. It's disgraceful for our country to have crafted artificial demand with the mass immigration that's coming in and low supply of housing because of all the regulation and bullshit. They've created this bubble here. And sadly, people are trying to compete. You know, I read this article of this lady, this young woman. She's in Adelaide. She said, you know, I'm a single person. I own 100 grand a year. I feel defeated. I went to uni. I worked hard. My wage, half of it's got to be used for a mortgage. And they go on to say, I probably won't even like the place anyway because it's not available in the right price range. It feels like all of this is a waste of time. So I think that the Australian people know that they're getting a bad deal here. And if you go to any other country, Western country, like the United States, it's 4 times income to buy a house. Here it's 13. It's like, Sydney is only second to Hong Kong. But Hong Kong is the doorstep to China. The largest, well, next to India, the largest, most populated place on the planet. And we're comparing a little country of 25 million people to China. Like, it should be more expensive in Hong Kong because it's a finite landmass on an island. It's listen to this city, but it's on an island. And like, there's 1.3 billion people across the river, across the way. So it should be the most expensive real estate in the world because a lot of more than we shouldn't be. We shouldn't be the same.
I feel like there's a bubble.
There is a bubble. If you look at that house, $3 million, you can buy a castle in France with 30 bedrooms for the same price. You can buy that shithole in Brisbane. It's a bubble. It's a bubble. It's a bubble. I stand behind. I've done so many podcast episodes on this. It's obvious because if you look at investment, Ben Graham, who is Warren Buffett's mentor, he said the best investing is always done best when it's most business-like. That's what he said. He says, quote. So if you look at something like that, it's completely detached from the fundamentals. So if a house like that, it'd probably rent out for say $2,000 a week. Yeah, maybe best case $2,500 a week. But if it's 3 million, 6% on 3 million is 180,000, which is like 3.2. So you're losing 700, 800, 900. If you include operating costs, you're losing $1,000 a week in cash flow to borrow money to buy that house. So it tells me the rental yields of 3% are not commensurate to value because interest rates are 6.
That's weird.
It's obvious. It's just a bubble. It's the reason why people buy stupid investments like Tesla. It's 300 times earnings, 300 P ratio of 300, which means it'd take 300 years to earn the money back. Only idiots would buy that. It's speculation. It's just pure Investing is all about, as Warren Buffett said before, investing is about buying a bush and knowing how many birds are in the bush and making sure you know how to get the birds out. And the way people invest in a speculative bubble market, in stocks and in real estate, is they're just buying birdless bushes. They're buying a bush with no birds in it. Crypto, gold, stupid, crappy house. Like, there's not enough birds in that bush for me to want to buy it. But if you look at the other business, like our laundromat, am I prepared to spend $250,000 on that bush to get 100,000 a year in birds? Yes. 2.5 times earnings to buy that versus 30 times earnings to buy that shithole. Like, or Tesla, 300 times earnings. It's completely detached from fundamentals. And the problem with that is it can go on for a very long time before it corrects. And the last time Australia had a demand-driven, like an immigration-led property boom was in 1890 in Melbourne area. And you know how long it took for the real estate prices to come back? 70 years. So I'm not suggesting we're in 1890 now, but this bubble is now clear and obvious. Like when we're seeing properties like that quality sell for 3 million with no fundamentals with the income attached, like the income doesn't meet the return, it's obvious that we're in a bubble. If we're in a bubble and you buy now, it's not that it may crash hard, it's that it may go sideways for 25 years, which is a very big opportunity cost. And the same with Tesla. If you buy that as a company right now, it's so extremely overpriced compared to its competitors. Like BYD is just such a superior company to that. It's so overpriced that if you buy that as a whole company now, it may not return may not get a return out of it. It may just go down for the next 30, like it can. You know, look at Cisco, look at the dot-com bubble. The dot-com bubble, if you had bought the NASDAQ in 1999, it took 14 years to recover back to those prices. So I think people are caught up. They're like, oh, it won't crash. Well, it doesn't have to crash. It can just go sideways for 20 years. You know, gold did that. Gold from 1982 to the year 2000, gold went down by 70% for 21 years.
So the 14 years is a lot shorter than 70 years and 21 years. So that's why you feel like stock is the most reasonable investment place.
The reason why it is because you can identify, if you have the skills, you can identify undervalued companies that even if the market goes down, you can go up. Because there's some companies that you can buy that are very undervalued. You know, like I know famously Charlie Munger made 30% returns in 1 year where the stock market fell by 20%. So that's so possible. Like where we positioned our portfolio, we've got Chinese, we own Alibaba, United Health, and we own and Berkshire Hathaway. They're at bigger positions. And I think about that and I think, well, if the market falls, Berkshire Hathaway will do really well because they own $380 billion of T-bills. So they're positioned for a downfall. UNH is undervalued, like it's a main leading health insurer in America, and it's cheap. It's 15 times earnings. It's far cheaper than the market. Even the S&P 500 is selling for 30 times earnings. It's a very good. That's historically the most expensive it's ever been in history. But if you can buy a great company like UNH for 15 times earnings, you're protecting yourself from the downside. So if the market crashes, our portfolio is positioned to do better. So in those ways, with the stock market, you can find really good quality companies that are selling for mispriced. They're mispriced. They're not selling for what they're worth. And if you can buy them, or buy small businesses, or build small businesses, when the market crashes, the real estate market, the gold market, the whatever, the big bubble and everything, you can still do well when market crashes. And that's why you got to find value.
Because that's a real thing.
Well, it's just value, isn't it? It's like buying a dollar bill for 50 cents. When is that a bad idea? You know? And people are buying, like they're trying to keep up with these. There's an old saying in investing, never chase markets, but people are chasing the real estate market. They're chasing gold. They're chasing Bitcoin. They're chasing this march upward in the markets because they want to get a piece of it. But that's a bit like, it's like Cinderella when she goes to the ball with the prince and she knows at midnight she's going to turn into a pumpkin or she's going to turn back into a rags. That's the story of Cinderella, yeah? Well, people are playing the markets like that and they know that they're going to turn into a pumpkin at midnight because they know it's not going to last forever. With Cinderella, she knew when to leave because there was a clock on the wall. She knew it when it struck midnight, she had to go, right? So she knew when to go. And she runs out and she loses a slipper and so forth. Now the prince doesn't see her in her rags, so that's good, she knew that. But the people playing in the real estate market, and the gold market, and the crypto market, they're dancing with the handsome prince now and the music's playing, it's all great. But they say, oh, well, get out of the market. The problem is there's no clocks on the wall. So how do they know when it's midnight?
Just being drunk.
They're drunk on greed, but they don't know when it's going to stop. And like the other day, Trump comes out and tweets about, China added some regulation to rare earths with its trading partners. And Trump spits the dummy and says, well, China's got all these rare earths, and they do. They've got all the rare earth, and it's not the rare earth that they own, it's the rare earth that they can refine. Their refining is 15 years ahead of everyone else. So they're in a very good position to negotiate hard on trade, which they are doing. And Trump spits the dummy, and he says that's Australian lingo for Trump lost his temper. And he tweets, well, China, you're unfair, basically, and we're going to put 100% tariffs on you. And then that day, the market fell by 5%. The NASDAQ fell by 5%. And all of a sudden, just with that one thing, 5% is nothing. And it fell by 5%. And everyone got liquidated in the crypto markets. Everybody. My friends who are trading crypto, liquidated. There was 10, 5, $30 million accounts, gone. Because they're all playing with leverage. So one tweet by Trump caused a 5% correction in the NASDAQ, which completely decimated crypto accounts. And you think about that. That's one small correction. Now, what if it was 50%? What if we had a 50% collapse in the market? how would that affect crypto? How would it affect real estate? And it's happened before and it'll happen again. It will. And the reason why Warren Buffett has got $370, $80 billion worth of treasury bills, and there was at the meeting that we went to, that I met you at,
Yeah.
we were sitting at that meeting, he said, someone asked the question, why do you have 38% of the market cap of the company in T-bills, in cash? He said, well, we can't find any good deals because everything's overpriced. You can tell there's a massive bubble, and he can't find good deals to deploy the capital. He said, now, the market may not correct in 5 years, but it also will do it before 50 years. He said, in between, I don't know what's going to happen. He said, probably not this year, probably not next week, maybe within 5 years it's a possibility. He said, certainly before 50 years. So he said, in that bracket, he knows without a doubt we will go through a serious market correction. The private credit markets will get hit because the private credit's it's just gone off. It's bubble. There's a huge bubble in everything, and the reason it is because they dropped interest rates to 0% for too long. So we're now a byproduct of that. We've still got a hangover. We've got this huge sugar hit, and when it falls out, it's going to be of biblical proportion. People will be jumping off buildings. They already are. Those crypto guys were jumping off buildings last week. They were killing themselves, a lot. Now that's a small correction. Wait till the other thing too.
So you mean like every asset has a bubble now?
Yes.
Even if that's a Nasdaq.
Nasdaq's in a bubble. It's like 40 times earnings. S&P 500's a bubble. Real estate, gold, Bitcoin, cryptos, basketball cards, classic cars. You name it. There's a
Everything.
bubble. Yeah. What's interesting though is the crypto markets, because everyone goes on about crypto and Bitcoin. And it's a birdless bush. There's no birds in that bush. You can't value it. I don't know what to pay for Bitcoin because I don't know how many birds I'm getting back. See, with our laundromat, I knew I wanted to pay, say, 200,000, 300,000, 400,000 because I knew how much money it was making. That's how you value companies. That's how you value real estate. If I buy that apartment up there and it produces 100 grand a year, I'm like, I'll pay 2 mil. I know, because it's a fair price, but I wouldn't pay $1 billion. Right?
Yeah.
But people in crypto and God, they're buying these things that they're not producing income. So it's very hard. There's no measure stick to know how much you should pay for it. So you don't even know if you're getting a good deal. You don't know if 120,000 per Bitcoin is a good deal because you have no gauge rod. All you have is yesterday's price to compare it to. And so what's interesting about that is that in the crypto markets, there's no history of a crash. So they don't have things like the stock market. So the stock market's been through, multiple crashes in the 1800s. It's been through the panic of 1907. It's been through the 1929 stock market collapse and depression. It's been through the 87 crash. It's been through stagflation, the crash of the 70s. It's been through the dot-com bubble crash in 1999. It's been through the GFC internet. Now, got all that history. And in the stock market, they've got things called circuit breakers. And when there's a massive collapse and it falls fast, they close the market. They ban short selling and they close the market, because if they didn't ban short selling and close the market would fall by 80%. It would just get decimated because of the panic. So they've got all these laws in place to stop bank runs. They've got laws to stop this market falling and stop short selling. They've got all that in place because they've learned from the past. But in the crypto markets, they don't have that. It's a 24-hour market. It never closes. Massive leverage, untapped leverage, unregulated. No circuit breakers. So when you see a massive collapse in the crypto market, it could possibly wipe out 99% of the value. In which case, how can you put your net worth into something like that? And the reason why people are doing it, this because they've never been through a collapse, and they don't even remember the GFC. But you've got to position your portfolio and your assets and your net worth in a way that prevents you getting taken out of the game, because it's hard to start. You don't want to start again. You've got to stay rich one time. And people don't understand this stuff. They just don't think. They just want, my neighbor's in crypto, I'm in crypto. They have no fucking idea.
Greedy.
Of course, greed. Yeah. It's not as much greed. Somewhat is, but it's more they don't want to miss out. So they don't want to see their neighbor get rich while they stay poor. That's probably what's driving it more.
Like a FOMO. Fear of missing out.
Yeah. They want to be at the school dance. They don't want to miss the school dance. They don't want to be at a barbecue with their friends and everyone's made money in crypto and they're all rich and they will miss out. They don't want to be the dud because they care about what people think too much. Whereas I don't care. I'm happy to be the dud. You've seen my podcast episodes. I'm the only one. I'm one of the only ones that stands loudly against Bitcoin in a big way, and real estate for that matter too. So I'm like a pariah. I'm a rarity. I'm a bet. Like no one I know is doing podcasts on this. but I am, because I've got some level of idea about investment principles and fundamentals, because I've been a student of Warren Buffett for so long. A value investor, and I'm sure all value investors and those that seek fundamental, good quality business decisions, I think they feel the same as me, but they don't have a podcast on it that fights people on Bitcoin. But I think I have to, because a lot of people, I want to give them the right education. I don't want to see them go into something that they're going to lose all their money in.
But I heard that in Australia, like real estate has the tax-free, and you should pay the tax for the stock. Don't you?
Well, it's tax-free on your personal home. The gains are tax-free on your personal home, but not the property investments. They're taxable, which is still fine. I mean, and I'm not against home ownership at all, and I'm not against real estate investing in general, because it's a very fine asset. Like, it produces income, it's value, it's shelter, it provides value. It's good, but it's just because an asset is high quality doesn't make it a good investment, because price and quality are the two things that dictate a good investment. Because you either have the best, highest quality company or real estate, it's not worth an infinite price. So you have to couple it with price at the same time. So if we look at how to assess investment scenarios and situations, you first have to go for quality. So that's the first step, because you don't want to buy inferior investments, no matter what the price is. You know, Warren Buffett's got a famous saying. He says, it's better to buy a great business at a fair price than a fair business at a great price. So you don't want to get stuck in cheap. So if we look at the assets that I'd consider buying, I wouldn't buy crypto and I wouldn't buy gold, because they're speculative only, right? They don't produce any income. So they're out. And if I look at businesses, ones that I understand that are predictable, repeatable income, and that have multiple verticals and business lines that have got a competitive advantage, that make sense, that have been around a long time, that pay dividends. You know, there's all the quality, high return on capital. They're the things you look for in a business, whether it be a public business or a private business, a small business. Now, if it ticks those boxes, that's great. They're the things, and also real estate. Like, if you have a piece of real estate that's got, say, multi-doors, multi-family, producing good 5-6% yield, it's in a good location, and the person has got a mortgagee in possession sale, and you can get it for a good price. You know, like the way that Trump bought Mar-a-Lago, what a great deal. So I'm all for great real estate deals. It's just that right now there are none. There are very, very few. And so I think that I'm okay with real estate, I'm okay with stocks, I'm okay with businesses as terms of quality assets, but I'm not okay paying an infinite price for them. Like this stupid business, like I'd never buy that. So it's like, so I think I'm open and willing to invest in quality assets for sensible prices, ones that I can hold for a long time, that I don't need to sell to realize a capital gain. I don't want to, you know, Charlie Munger used to say, I'm not looking for exits, I'm looking for holds. And so I'm looking to buy businesses or stocks or real estate that I can hold forever. And right now I can't justify the price of like there's houses here in the Gold Coast where we are. By the way, we're at the epicenter of real estate. This whole city is just, there's a religion of real estate here. So we're right in the thick of real estate. And by all accounts, it's a beautiful place. But everyone, like half the people who live here are real estate agents and half are buyers. And so there's a place in Broadbeach up there, it's the next suburb up. And there's a 3-bedroom apartment, and it's I sent it to my dad yesterday, it's $4 million. Think about that. 3-bedroom apartment, $4 million.
It's crazy.
Well, it is, because I think the rent, let's say the rent is, you know, $2,800 or $3,000 max a week. You're losing $1,000 a week, so 50 grand a year down, plus operating costs. You're probably down 60, 70 grand a year just to hold it. And the only way to make money is that thing to go up. It's like a hot potato. You know, you hold it, I hope it goes up. But what if it doesn't? What if it just went nowhere for 10 years and you had to pay 50, 60 grand a year in losses for that whole time to hold it? And I saw this happen in 2010 in the mining boom here. So in places like Gympie and you know, Emerald and Mackay and all these mining towns, people bought houses there and they went sideways and nowhere for like 15 years. Same here too, like in this suburb here, Main Beach over there. In 1999, there's a real estate boom here again, like this. And they were buying off the plan apartments in Main Beach for like $1 million, which back then was a lot. And they literally went nowhere for like 14 years. 14. So if you're losing every week on the rental for 14 years, you've got to hold on to that for 14 years of losses. And it's a hard thing to do. So you could buy a place for $4 million, a 3-bedder, but are you going to make money out of that? Like, here's how I look at it. Will that be worth double in 7 years? No. Like, who's going to buy an $8 million 3-bedroom apartment on the Gold Coast in 7 years' time? Who? You know what I mean? Like, it's ridiculous. It's stupid. It's turned into a joke. It's turned into a casino. Really. Yeah. I'm happy to be stand here and do another episode with you in 7 years and say, oh, I made a mistake. I stand corrected. It's worth $8 million. I just can't. I mean, who's going to be paying $7,000 or $8,000 a week to live in a fucking 3-bedroom apartment on the Gold Coast? What's that? $400 grand a year? What, to live in a flipping 3-bedder